What's up, all my investors? It is Shaddai, and I'm back again with another HINANCE video breaking down the complex financial world for everyday people like me and you so that we can make some cheddar, some moolah, some bread. Today I'm talking about the current state of the stock market, how you should feel, how I should be feeling, and what we should be looking towards or looking for is the mindset. But before I get there, I got to show my appreciation to everybody that's been here since day one. I appreciate you all and all the new watchers, all the new supporters, all the new YouTube family. I appreciate you too, even if this is the last video you're going to see. But just don't forget to hit the thumbs up on this video. Subscribe if you're learning something or if you just want to show some support. And share this video with someone else that is trying to make some money on their phone, because that's what I'm here for. We're trying to make $1 million off the phone. And y'all see, I got the dress up this week. I'm back to dressing up, because when I was dressing up, the stock market was doing good. So that's what we back to. We be a light little dress up, you know, for some market good luck. That's what we need right now. Clearly, we need the good luck because the market was being slaughtered the past 2 weeks, and mainly due to treasury yields. And I just want to point out one thing, because I feel like there's a lot of fear being poured into the market. And government and the media does a very good job at this. They get people to move money around, sell, buy over here, buy this over here, invest in this, sell out of stocks, buy real estate, sell out of stocks, buy Bitcoin, sell Bitcoin, buy stocks. They get you to move the money around, that they cause fear. But when there's people, when they're bringing fear into the market, you got to buy. You got to be fearful. You got to be a bull, you know? Imagine a world where you didn't buy the dips, like if that wasn't a thing. And shout out to Stu, David Portnoy for bringing that up. Like, imagine a world where you didn't buy the dip. There'd be people jumping off of bridges left and right. But good thing people do buy the dip. And I've been buying the dip the last 2 weeks. I've been averaging my cost down. Look that word up, dollar cost averaging. I've mentioned it in one of my videos before. It's a good strategy to use, especially when you get, like, I got my feet wet a little too early. So, you know, now I'm dollar cost and averaging to get better numbers, and I wish I had all the money in the world, man. I'd be at some very good numbers right now if I did. But I'm sure many of you can relate. Whatever it is, whether you're spending $100, partial shares, full shares, $10,000, if you're buying the dip, I think it's a very good idea to be doing. Kathy Wood said that, you know, this market correction was a gift, and I kind of predicted this market correction based off my research that I was listening and reading. I'm gonna be honest though, I didn't expect it for it to come this quick. I was expecting like May earliest, end of April, May earliest. I didn't expect it to come before the stimulus package, but now that the stimulus package is here, it's another good sign. It's a good sign. The jobs coming, more jobs are coming, another good sign. And I want everybody to know that the market's falling because of the 10-year treasury yield percentage, which is at 1.5, which isn't a bad number. It's not a bad number. It's a very modest number. Like, it's not like 10%. It's really modest number. But I think it's everybody's being fearful. They're being fearful. Did I say fearful earlier? I meant fearless. They're fearing the how fast the increase it went to 1.5. I think is what everybody's really getting all scared about. But I mean, based on my research, they're expecting that to be 2%, 2% inflation with 2% on the treasury yield. I believe it evens out, if I'm not mistaken. But of course, always do your research. Some interesting facts that I got. So Bank of America reported that investors poured $22 billion into stock funds this past week. $22 billion. When people are fearing, you gotta be fearless. I said fearful earlier. Fearless. And so these numbers, this $22 billion doesn't mean that the money has actually went into the stocks. It just meant that, you know, the money has been poured into the fund, which will then distribute and buy stocks when it feels right, whenever the funds feel right. Tech stocks obviously got hammered, but it's an opportunity to buy. If you've been looking at these tech stocks, these are the opportunities. Get your feet wet. Even if you think that there's more dip coming, get your feet wet. If you got $100, break that $100 in $25. Well, you got 4 $25 slots. If you got $1,000, that's 250 slots each day. Buy 250 worth. If you think the market's still going to fall, continue to dip. I think we might start to see a slow range on the up. As long as good news continues. Good news continues. Will the Treasury continue to rise? Probably, maybe. They are expecting 2% on that, and they're expecting 2% on inflation. So, of course. And obviously, compared to last year numbers, inflation is going to be crazy up compared to March last year, April last year. These are things that you can kind of, we were at a complete pandemic last year. Either way, I think you remain strong if you buy the dip, you hold long term. History states that the market always recovers. There's many new traders in the market right now. And I think that that's what is making everything go haywire. And things are a little bit different. It's not the same. You can't look at the same metrics from 10 years ago. It's a whole new ball game. There's so many more retail traders in the market right now. So it's just a whole new world. And if you hold long term, you buy the dip, you remain confident. And I know it's hard, especially when you look at the market going down. It's hard to remain confident. But stay strong. And in the end, I think that you will be happy with remaining steady and watching long term. And that's not saying buy. When I say long term, you have to buy in a company that is doing something that they'll still be here in 10 years. So I'm not saying go invest in AMC because they're going to be reopening in long term. They're going to I don't think AMC is going to be here in 10, 20 years. That's my potential prediction. But there's people out there that would say otherwise. But either way, hold long term, buy the dip, invest in disruptive companies, and I think that you'll do good. But I'm not a financial advisor. Trade as you wish. I'm just doing my thing and hoping that you wake up and you see some opportunity even when everybody's feeling fearful. I appreciate you all for watching. Don't forget to subscribe. Don't forget to hit the thumbs up on this video. Share with a friend, family, significant other. Everybody can learn. Everybody can make more money on their phone. I'll check y'all out tomorrow.